Welcome back to Stocks Pulse, your go-to channel for sharp insights on market trends, global events, and how they impact the Indian economy and your investments. The Middle East is once again at the center of a geopolitical storm. As tensions between Iran and Israel escalate, the global ripple effects are impossible to ignore, and for India, the consequences could be far-reaching. In today's video, we break down how this evolving conflict could impact the Indian economy, key sectors, and the businesses that link us to the region. Let's dive in. First, let's talk about energy, India's most vulnerable link. The country imports over 80% of its crude oil needs, and the Middle East remains its primary supplier. The Strait of Hormuz, which borders Iran, is a vital choke point for global oil and LNG shipments, including those headed to India from key partners like Iraq, Saudi Arabia, and the UAE. If Iran disrupts this route, as it has threatened in the past, the impact would be immediate. We've already seen oil prices spike by up to 12% following Israeli airstrikes, with Brent crude briefly touching $79 per barrel. For India, a sustained conflict could mean higher inflation, slower GDP growth, and increased pressure on the rupee. A weaker rupee drives up import costs, widens the current account deficit, and ultimately hits the average Indian's wallet. Moving on to the broader impact on trade and logistics, shipping routes that had only recently reopened in the Red Sea are once again under threat. If tensions escalate, cargo ships may be forced to take the longer Cape of Good Hope route, adding more time, distance, and cost. This means higher freight charges and insurance premiums, making Indian exports less competitive while driving up the cost of key imports like LPG, LNG, petrochemicals, and fertilizers. That, in turn, can disrupt industries from agriculture to manufacturing. The manufacturing sector is particularly exposed. Many industries, like aviation, chemicals, tires, paints, cement, and logistics, rely on petroleum-based fuels and components. With rising costs for jet fuel, gas oil, and naphtha, profit margins are under pressure. If the conflict continues, these industries may face lower output, layoffs, and weaker earnings. Disruptions in fertilizer and LPG supply would also hit rural households hard, potentially driving up food prices and challenging food security. Moving on to the direct trade activities, India's direct trade with Iran and Israel may not be massive, but it's meaningful, totaling around $5 billion annually. With Israel, India exports polished diamonds, jewelry, electronics, and engineering goods, and imports military hardware, precious stones, and chemicals. With Iran, the trade basket includes basmati rice, tea, coffee, and sugar on the export side, and dry fruits, chemicals, and glassware on the import side. Any escalation in conflict risks disrupting these flows and hurting small and medium-sized businesses involved in these trades. Further, several Indian companies also have established business footprints in Israel. For example, Adani Ports operates the Haifa port, a strategic asset in its global portfolio. Sun Pharmaceutical owns a controlling stake in Taro Pharmaceutical, headquartered in Israel. Tata Consultancy Services, TCS, delivers IT and consulting services within the Israeli market. Kalyan Jewellers includes Israel in its international jewelry operations. These investments reflect growing economic ties, but they also expose Indian companies to regional instability. Any conflict has wide-ranging effects, and financial markets haven't been spared either. The Indian rupee has weakened against the dollar, and stock markets have seen volatility as investors flock to safer assets. If tensions continue to rise, we may see more unstable capital flows and increased borrowing costs for Indian businesses. Still, there's room for cautious optimism. India's strong macroeconomic fundamentals may provide resilience in the face of external shocks. But the need to monitor developments, especially oil and freight costs, remains critical. To sum up, the Iran-Israel conflict is not just a regional flashpoint, it's a global economic risk. From energy and logistics to trade, manufacturing, and markets, its effects on India could be profound. The longer the conflict lasts, the deeper the economic disruptions could run, especially given today's deeply interconnected supply chains. As geopolitical tensions evolve, investors should remain alert, yet also look for opportunities that may arise from the shifting landscape, particularly for companies with strategic links to the region. Thanks for watching Stocks Pulse, your window into the forces shaping the market. If you found this video useful, please give it a thumbs up, share it with others, and don't forget to subscribe for more sharp and timely analysis. See you in the next one.